Welcome back to our markets discussion this week. Mark Gold and Chip Nellinger joining us. Mark, commodity markets seeing a bit of a pop midweek. What was the spark?
Well, a couple of things. Number one, there's been talk about E85, E15 rather. It didn't get really put into the budget, but there's still some hope there. Good demand for our grains, no question about that. The crude oil on a tear. We're at multi-month highs out here at $65 a barrel. So all that plus the weak dollar has certainly helped commodities out here.
Yeah, Chip, do you agree with that? Do you think it was really one thing that supported the market, or are you in Mark's camp that really it was a multitude of things that's really favorable to the commodity markets and the grains?
Yeah, Tan, I think it's a multitude of things. We have really good demand still under the surface here for the grain markets. I think the crude oil move north of 65 with some increasing Iranian tensions there. The metals markets, blowing up to new all-time highs in gold midweek. I think all that helped. A little bit of short covering, put that all in the pot, and we had at least the first half of the week a nice little rally in the grain market.
Well, there's positive fundamentals on the corn side, at least on the export side of things. Mark, last week we saw record-setting corn export demand in a week on the books. Is this demand enough to at least keep a floor under prices in the near term?
Well, here's the problem with corn in the near term. You've got all of the delayed pricing contracts coming due at the end of February. The last 3 years, we've broken in the month of February until we get done with the DP contracts. And that's a problem for this market in the short run. But I wouldn't want to be short corn, heading into, March 1st, let's say, after we get some of these DPs expire, when the options expire on the Feb options. But long term, I think we've got a market here, but it's really dependent. The game changer will be E15. If it's a mandated deal, then we're talking about 2 billion bushels plus demand. If it's a voluntary deal, then we're talking about 300-400 million bushels. It's not going to be enough to really move the needle with a 2.2 billion carryout out here. So hopefully, if the president wants to get the farmers really cheering for him, come up with a mandatory E15, and that's going to help the corn market quite a bit.
Mandatory, voluntary, devil is always in the details. But Chip, Mark just mentioned how much demand that could create. Do you think that E15 is the ticket to help turn these corn prices around?
Well, I don't think it's the silver bullet. It certainly is going to help. I think in the case of corn, there's obviously tremendous record demand bubbling under the surface. I do think that holds prices together. It doesn't mean that we have to rally because of that. The E15 is going to help, but I don't think it's the silver bullet maybe that everyone had hoped in here.
Yeah, and when we look at 2026, we're already seeing this debate about acres. No surprise. I mean, you look at the monster corn acres that we saw last year. But Mark, in your opinion, do soybeans need to actually buy acres right now?
Well, they're looking at increasing soybean acres 3 million. You've got a carryout of 350 right now. I don't think you really need to buy acres out here. I think what we need to see is more demand, getting China to continue to buy our beans once they get through some of this glut that Brazil's going to have. Hopefully they come back into the market in a big way. But certainly if we could get something on Z45, if we could get some of these programs that will really help demand out here, it's going to move these markets. But, long term, I'm pretty friendly to the grain markets, but I think we just got to get through February 1st. Keep in mind, when you look at what's happened in some of these markets, whether it's silver, gold, crude oil, we have gone through the roof. And generally, when you see these what's the cheap commodity out here right now? It's U.S. grains. So would I want to be short 100,000 wheat like the funds are, 80,000, 90,000 corn? No thanks. But maybe we just have to get through the month of February till the farmer clears out some of these big stocks they've still got on farm.
Yeah, I mean, we talked about that on the show this weekend too. When you look outside of grains, the commodity market overall, it is impressive action when you look at some of these prices right now. Do you feel like we're on the verge? Do you think we could see some of that interest spill over into the grains?
Well, I think it's possible, to Mark's point. I think wheat's probably the most susceptible. to a short covering rally just because the funds have been short a massive amount for 3 years. And that short position is getting a little bit stagnated at this point in time. The dollar maybe is at the heart of all this. We've seen a pretty sharp move lower in the dollar. I'm not so sure that's not kind of a coordinated effort by the current administration to cheapen things up. If we're in that type of environment longer term for the next 2 or 3 years, that's certainly going to lift all commodities. We talked earlier, though, especially in the case of beans, we're kind of burdensome here as far as world supplies go. So, it's tough. It doesn't mean we can't rally. It doesn't mean the dollar can't lift us higher in an inflationary type push, but we're still going to be met with a lot of farmers selling and a lot of supplies above the market here.
But with soybeans in the near term, Mark, is it all about South America this year again?
Well, we're seeing a little bit of dryness right now in Brazil. They're supposed to get some rains. Southern Argentina has been dry. If we start to, some of the analysts are cutting their crops a little bit, 1 million, 2 million metric tons. That's not enough. We really need to see some real bad weather there. And that's right now would be a good time to see some real heat, put some pressure on their crops out there. But long term, I think the beans have got a play out here. When I remember being on the floor in the 70s and 80s, into the 90s, where silver and soybeans kind of traded neck and neck for a long time. Wouldn't you love to see $100 soybeans out here? I would. But, it's not going to happen. We've kind of divorced ourselves from that. But I think it just goes to show you these commodities here in the U.S., the grains in particular, are cheap. And somebody at some point is going to say, hey, this is a good opportunity to lock in some cheap prices.
Now, we have seen impressive action, though, on the cattle side. And Chip, we're having this discussion before USDA releases its, cattle inventory report out late on Friday. So we don't have those numbers. But kind of what are the numbers to watch? What are we expecting? And how could that set the groundwork for cattle prices in the months ahead?
Yeah, those are always volatile reports. They're hard to kind of project ahead of the numbers coming out. I think the two areas that people are going to look at as far as the market goes: are we building the cow herd out here, and what's the supply of feeders? And that's a little bit in flux with the Mexican border being closed. We're not seeing feeder cattle flow north like they normally would, and so I think it's a moving target out here. But certainly that report could be very volatile. Are we building the herd? Is there any evidence of that yet? What are domestic feeder cattle supplies? And that could be definitely a market-moving report for sure.
Mark, even if USDA says we are starting to rebuild this herd, and there are signs of that, it is going to take some time. So are you still bullish on the cattle market?
We had this big break in the cash market, in the box beef market, and we've come back from that. We're about $20, $25 off those lows. But I think we're going to start seeing more and more consumer resistance to these high prices. You've got inflation, whether it's house insurance, whether it's taxes, all these things are ganging up on the American consumer. And can they find something cheaper out there? Now, April hogs were at record high contract highs the other day. So maybe not pork, but maybe a lot more chicken, some other things in here. So I'm questioning demand at these kind of levels. But certainly, I don't think this report's going to show a big increase in the herds. I think this report generally isn't that big of a mover, but I think we're going to still see cattle at very low levels, and that's going to be supportive underneath until we open the Mexican border. I just wouldn't want to be long cattle the day they open the border, and that's coming sooner rather than later.
Well, Chip, there was a fire at the Booker, Texas cow plant last week. I know it wasn't fed cattle, but does that have any impact on the already tight supplies that we're seeing in this country?
Yeah, it didn't seem to have an immediate impact on prices, and I didn't hear exactly how much damage was seen there. Certainly, there's always a question, right? We lost or going to soon lose the plant in Lexington, Nebraska. So the chain speed certainly is slowing down as far as the capacity that we have out there. It takes a while to kind of get that distributed out and that capacity into other plants. And and absorb that loss. So certainly when there's ever a disruption like that, it can be very market moving. But it looks to me, just reading between the lines from the market action, that wasn't a massively disruptive fire or something that we have to fear longer term disruptions from.
Chip, Mark, thank you so much for joining us this weekend. We appreciate it. We need to take a quick break. And then it's not just E15 that we're waiting on answers from when it comes to the biofuels industry. We talk to Chip Flory of AgriTalk next.